Administrative Assistant Professor, Department of Commerce and Computer Applications, Dr. SNS College of Arts and Science, Coimbatore. Now we are going to discuss about the cost sheet, how to prepare the cost sheet. So first we discuss about the format of cost sheet. So cost accounting is prepared for analyzing the cost per unit of the productions. So on that purpose we have to prepare the cost sheet in the industrial factories. The format is, first we take the opening stock of raw materials. In that opening stock of raw material we add the purchase of raw material and less the closing stock of raw materials. The answer should be raw material consumed. It is called raw material consumed. In that raw material consumed, we add the direct expenses. What are the direct expenses incurred in the industry or factory? That should be added with the raw material consumed. The answer should be called prime cost. That is prime cost. Next step is we have to add factory overheads in the prime cost. What are the indirect expenses incurred in the factory? That should be added in the factory overheads. The answer should be called works cost or factory cost. In that works cost we add with the opening stock of work in progress less closing stock of work in progress. That answer should be called works cost. Another head is we add office and administrative overheads with the works cost. The answer should be called cost of productions. In that cost of production we add selling and distribution overheads. What are the selling expenses and distribution expenses incurred by the factory? That should be added in the heads of selling and distribution overheads. The answer is called cost of sales. We deduct the cost of sales from the sales value. We will get the plus value means it's called profit. Minus value means it's called loss. That is the format of preparing cost sheet. Now we discuss about the sum. In that sum, the direct material is given 10,000, direct labor is given 4,000, direct expenses is given 500. In this sum, there is no opening stock and closing stock. So directly we add the direct material, direct labor and direct expenses. All the three things we added, we will get 14,500. That answer is called prime cost. Next step is we add works overheads or factory overheads or manufacturing overheads. So only one item is given, factory expenses, that is 1,500. We add the 1,500 with the prime cost. We will get 16,000. That the answer is called works cost or factory cost or manufacturing cost. In this sum, there is no opening stock of work in progress and closing work in progress. So directly we add the office and administrative overheads. In that sum, only one amount is given, administrative overheads 1,000 value. We add with the 16,000, we will get 17,000. That answer is called cost of production. So total cost of production is 17,000 in this sum. Next, we add the there is no opening stock of finished goods and closing stock of finished goods is given. So directly we add the selling and distribution overheads. So only one selling expenses, that is value of rupees 300. We add with the 17,000, get the answer of 17,300. That is called cost of sales. That answer is called cost of sales. Next in this sum, the sales value is given. 20,000 is sales value. So we have to find out the profit or loss in the company. So we deduct the cost of sales from the sales value. Sales value is given 20,000. Cost of sales we find out 17,300. So sales value is more than the cost of sales. So the company gets the profit value plus value, that is 2,700 rupees. So 20,000 minus 17,300, we will get the plus value of 2,700. So the company gets profit value 2,700. This is the answer for profit 2,700. Okay. So this is the format we have to prepare the cost sheet. So why the company preparing the cost sheet means we have to identify the cost of production per unit. Okay, so it is some total production is 70,000. That is total cost of the factory or industry. Okay, this way we have to prepare the cost sheet in some other sums also. Thank you.